After doing pretty well for the last 2 years, gold prices have been grinding down continuously for the past few months and are now about 20% below the highs hit last year. It's tough to pinpoint one reason for the decline, but maybe it's a combination of factors. The US dollar has been gaining against major currencies. Additionally, there's been a rise in bond yields. Maybe safe assets are no longer popular. And speaking of popular, maybe Bitcoin has become the alternative safe investment. So, can gold prices fall any further? Well, let's take a look. Before you do anything rash, whether you hold gold or not, you need to understand how gold behaves in general. Gold prices tend to be more dependent on the supply demand equation and geopolitical events that impact the supply demand equation. Gold is not like other asset classes that can be valued based on cash flow or intrinsic value. Because of this, gold prices tend to stay dormant for relatively long periods of time, which are then followed by more sudden and volatile prices. And if you get your timing with gold investment right, then you can generate good returns in the short term. But timing is not what comes naturally to most common investors. For those investors, maybe the strategy is consistent buying in scheduled intervals. So, given the recent fall in gold prices, what should you do now? Well, let's take a look at the charts. And so today we're going to begin looking at the weekly chart and then go to the monthly chart. And so we have the 2-year weekly chart on the Spiders Gold Trust, and the symbol is GLD. And as you can see from that top there, it's been a ride all the way down. Now, we looked at this a few months ago when there was a possibility of a move on up, but it got reflected back, and here we are today. Let's go take a look at that. Here, first volume is fine. Nothing wrong with that. But then here into the Mac, you can see once again the top and then the ride all the way down to this current level. Now, we looked at it, say, a couple of months ago in this time frame here, thinking that there's a possibility that the fast line was going to move up and through. It didn't. It got reflected, and so it came all the way down here. But looking at it now, there may be the possibility of a true basing and bottoming. Let's go look at the other oscillators. Here you can see the histogram, that first time here with the move on up and then the reflection back down here. Oftentimes when there's a couple of attempts at moving through, it's the second or third attempt that's successful. So we're in the second attempt and we're on our way. We're not there yet, but keep watching. Moving on down here into the price rate of change, it looks like a bigger bottoming and basing here. So I think that fits with the scenario that we may head through here soon. Into the relative strength, this is continuing on its way down. We have a little bit of an attempt of a bottoming basin here, but we're not quite sure. It's a little bit of a mixed picture. The stochastic is a little bit better. It did cross through and make its way up, at least the fast line did, but it came back down here and we're going to try again. So maybe this second time is the successful time. Here into Williams, one more time, another bottom here and a reflection on up, but we're still near that oversold territory. We need to move out and head up to that 50. So I think we do have a few weeks, but let's go back up here to the price chart and take one last look at this. It's been a relatively slow grind on the way down. And even if we do hit bottom and base here and head up, I think we have more trouble ahead. Let's go to the monthly chart and I'll show you what I mean. And so now we're looking at the monthly chart on GLD. And as you can see here, the top, and we came down to this point here, which is just above the 20 EMA. And as I had said in the last time we talked about gold, that we would be heading down and hopefully we'd see a reflection back up off of the moving average once we got there. That seems to be happening. Now, if we do get this reflection, we can perhaps head on up, but guess what? Go back here, the top, the move down to the 20 EMA and the reflection, and then another top, and then that's all it wrote, at least for several more years. Now this is a huge base and bottom here, and it looks like a pretty good cup and handle, but my fear is that we've come down here, we're going to get this reflection and on up, and history is going to repeat. But let me clarify, history doesn't repeat, investors do. And so maybe we get that reflection, move on up, and then we have a second top, and then on the way down. That's a very distinct possibility. Moving here into volume, see the same thing as we saw earlier, and then of course the MAC. And this is the big clue for me. Again, that top, the move through here, this is the reflection off of the 20 EMA, the move on up, and then another reflection back and down it goes. So we've got that top. The fast line has come through as it did before. If we get that reflection of the 20 EMA, look out if we do something like this. So be careful. Moving on down, you can see pretty much the same thing there in the histogram. And price rate of change doesn't really add too much, nor does the RSI, stochastics, or the Williams. I'm going to rely on that MAC. That to me is extremely important, and the fact that the fast line has come through the slow line. I don't like that. That's a huge red flag. I think we have the possibility of repeating what we did back there. Back on up here to the price chart, and you can see one more time a possibility of what may happen in the future. I'm not going to say probability, but it's definitely a possibility. So any gold bugs out there, be careful, be patient, be cautious, and make prudent decisions. And for today, that's ChewDog Charts. Thank you.